Good evening, everyone. Santil here. Can everyone able to see my screen and hear my voice clearly? Hi, Kanti. Hi, Rekha. Hi, Mr. Bath. Hi. I hope weekend was great. And when I see profits from batch 18, it's very happy to see that. So thank you. Trade safe. Okay. So don't jump into big trades. So trade safe. And now you should be able to identify at least a few of the positional trades with the doji and other pin bar candlesticks, right? So we will complete few more candlestick pattern, whichever is left, and we will start entering into the other topics. We'll wait for a few more minutes. Members are yet to join. We'll wait for a few more minutes. Any questions you can ask only related to the topic. Okay. Today's topic will be RSI MACD, and please share your view on it. On what? Is it wick or weak? W-I-C-K, Mayur. Wick. W-I-C-K. Mariko was a doji, didn't give a breakup. Let's see. Mariko, see, it's not necessary that every stock which is coming into the radar has to give a breakout today itself, right? It's not necessary. It's completely. It's not necessary. So our duty is, whichever the stocks is giving a breakout, we have to make our entry and trade properly as per the trade setup. Are we clear? And Mariko, let's see Mariko. And Aditya, good evening. Charting scanner appropriate? Yes, it's a good scanner, no doubt in that. Mayur, it's weak. Okay. Hi, Jay Patel. So you can see today, yesterday it was like a hammer. Again today, again it has formed a hammer only, right? Again today it has formed a hammer. So tomorrow we can keep it for radar tomorrow also. One of the criteria was volume should be in green. Now what I observed that some case volume in morning was green, but after entry volume turned into red. We cannot avoid such entries. We have to hold that kind of stocks with stop loss. Say for example, today I think we have given EI hotels, right? So it was a trade from bottom. From bottom, it was an early entry. It was a hammer. It was a doji like and hammer like structure. And on the day's high, we have given an entry. And Wellnut, again, you can see here. It's not a proper doji, but we have considered it. We have considered this based upon the fall. And DCM Sriram, you can see here again it's a trade from bottom only. It's more or less like a doji. Can we consider this as a doji? Answers. Now let's be interactive, only related to the subject. Can we consider this as a doji? There's a huge fall. You can see here from 380 it has came to 317, and you can see here if we make our entry here at 318, we should have entered 2 points earlier itself, but the moment when I came it was in 3 points high, but still we entered 314, 318, 314. It's an attractive stop loss. It's an excellent stop loss. Stop loss is only 2%. So we should not miss these kind of trades. See, in intraday itself, this stock has given 10 points. In intraday itself, it has given 10 points. So it's the position is open. So in channel, we have closed the stock with trailing stop loss. But if you see as a proper positional trade, the trade is open. So if we start doing like this itself, we can easily try to make out of 50,000 capital. If you take the stock in positionally itself, and you can start making intraday profits itself on 1000 rupees. How to stock, how to identify this kind of stock? Honestly, I'm telling, I took the stock from Phoenix positional channel. I didn't screen the stock because as I told you, I am not into live market screening or all those activities. I'm into training and back end using the, I'm handling sales. So Prabhu is not supposed to, Prabhu used to do this, but since Prabhu is not in office in the next 3 days, and so that's the reason I am doing these activities, engaging the channel. So I took the stocks from Phoenix Masters, that is on Phoenix Positional Masters. So a good quality trades they are generating. Okay, how is the target determined in positional trades? Agam, I'll come here. Are the positional research students or old batch students? Yes, the previous batch student. We can be a part someday. It's not someday. You can be a part. If you take the Genie channel itself, you'll get all those links. And now see, identifying the target. Let me tell you, identifying the target. Inverted A. You can see here, it has fallen till here. From now, we can take this as a target, a rough target. Is that clear, Agam? If you see 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 days, it's a gradual fall. So in 5 days, we can expect to reach this stock to reach how much? 360 levels. Is there an entry in the stock even now? No. If you get around the 320, you can make your entry. One doubt, after Doji next candle open yesterday's low, but still it's closed with a green. No, we should not enter. We should buy only above this level. This is the place we have to buy. Clear? So now let's get into today's subject. Can use 50° of Fibonacci as first target. Yes, you can use. And again, I am not into Fibonacci also. I use very simple layman trading activities. So once we complete the course, you will just enjoy it. It's very simple. No big theoretical, complicated theoretical terms we don't use. So as I told you, the inverted V, inverted A, like that we will be having all those kind of like children's uh, play activity we will be doing, but still we will get a very quality trade with 1:3, 1:5 risk reward ratio. Okay, so let's start now. I believe we have completed the pin bar, right? BFUL trade, I didn't get Aditya. BFUL, I didn't understand what is that. See, these all stocks students keep in radar, and once it starts reversing, they see it manually. They put a price alert. I'll explain you when we get into the trade setup. I'll explain you. Okay. So now we have completed the pin bar. So now we are entering into opening is not a matter. Once it crosses above the level, we can buy. Yes, that's right, Simon. So now we are going to see the next important candlestick pattern. So bullish engulfing. Bullish engulfing in the sense, have you ever seen the Reynolds pen, the previous version of Reynolds pen, old Reynolds pen with a white body and a blue cap? Do you remember? Do you remember this pen? I think everyone should have been used this, right? So every time I used to take this example, very easy to make you understand. Say like for example, if you take this cap, only the cap, and keep inside your palm and close your hand. So this cap will not be visible outside. This cap will not be visible outside, right? So that is called as engulfing. Keeping a small pen cap inside your hand and covering that, it is completely engulfed. Same like that, the first candle should, again it's like swing low should be there. Out of the 8 points, we are changing only the candlestick. It's a 2 candle reversal pattern. It's a 2 candle reversal pattern. That means without this and this, we cannot able to tell this as a bullish reversal pattern. The first candle should be downtrend, no doubt. Second candle should be in uptrend, no doubt. The the body of the second candle should completely cover the previous candle. The body of the second candle, the green candle, should completely cover the previous candle high and low. Are we clear? Say like for example, this is the first candle, it should be in downtrend. Second candle should be in uptrend. The body of the candle, the second candle should completely, the high and the low should completely cover the previous candle high and low. Even if it is like this, it is not accepted. Even if it is like this, it is not accepted. It is not engulfing. Clear? So it is like engulfing, completely covering the previous candle. So we can buy above this level with a stop loss of this area. So can someone tell what is the disadvantage in this pattern? Can someone tell quickly? Body of the, yes, including wick it should get covered. If the wick is this much, yes, perfect. If the wick is this much, it is not engulfing. This is not valid. So the disadvantage is, you can see here stop loss is very, very high. So for example, if it is 100, here it will be 93. So the stop loss is very high, number one. Number two, already a big movement is over. We can't tell us a big movement. After that, this will move very big movement. But still, considering as a small trader, as an initial trader, so the stop loss is high. So we can take, if you get a quality trades, you can trade. That means quality trades in the sense, if there is a big fall and the target opportunity is very big, then you can take this as a trade. Or else try to avoid these kind of things if you get a very big candle. Say like for example, if you get like this, the first candle is red, downtrend, and the second candle is green. If it is 100, the high is 100 and low is 97. Can we take this? Here it is, assume that this is 100, it is 93. So which is better, number one or number two? Number two. Perfect, right? Now you could able to compare the risk advantage, right? So we could able to easily evaluate, so which type of trade we have to take. I am not telling this is a bad pattern, it's a good pattern only. That's the reason it has been listed in the leading candlestick pattern. But still, we should pick the stock in the right place. So there is something called a situations. So based upon the situations, we have to pick the stock. So if the stop loss is big, simply avoid this trade. If the stop loss is small, the rally is big, yes, you can attempt. So you can read the stories, the psychology of the candlesticks, you can read. Same thing, nothing but out of the 8 points, you have to simply replace the doji with bullish reversal pattern. Are we clear? Yes. So next candlestick pattern is, let's see. So it's like, if I don't know how others are teaching, okay, I don't know how others are teaching, but I am trying to make it I am trying to breaking down into a very simplified way, so that to understand this, you can understand. For understanding this, it took me 1 year. For understanding this simple candlestick pattern, it took me 1 year. To register this pattern, it took me 1 year. But out of this 18 batches, giving an example, so breaking down. So I am telling in a very simplified way. See, we have seen the Reynolds pen, right? This Reynolds pen. I believe everyone in your life, at least one time you should have used this pen, right? This pen. So assume that taking this Reynolds pen cap, forget about this place, taking only this blue cap, keep in your hand palm, that is where we see the astrology, right, the lines, and close your hand. So do you think, can you able to see the pen outside, the cap of the pen outside of your hand? I am sure that this cap will be hidden from all adults hand, right? Maybe children's some small either top or bottom will come out, but for an adult this pen cap will go completely inside the palm. So like that this candle, the first candle, red candle, should completely get covered, including the wick. So pen cap, there is a small stick like this, just to keep it stuck in our pocket, right? So like that, including the wick, it should get covered, including this wick it should get covered. Clear? So this is called as bullish engulfing. Great. So next, so this is for buying, the name itself is bullish, so it is for buying. So it should come like this, there should be a complete fall in the market, and above this we have to go for a buy. Candle wick upside, it matters? No, it doesn't matter. There can be a wick here also, but the 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 condition is this candle high and low should be covered with the real body, For example, if it is like this, if the candle is like this will not become a bullish engulfing. This is not a bullish engulfing candle. Understood? The exceptions. Say for example, if the first red candle is like this and second candle is like this, still it is getting covered, but we cannot tell this as a bullish engulfing. So there should be a bull. It should not be a cow. It should be a bull. So we can see this as a bullish candle. This is like a calf, a smaller version of bull. So this we can't accept. Okay. So next. So this is how we will make our entry. You can see here live examples. I'll take you, once I go to the chart, I'll scroll multiple days of the chart. I'll show you all the candlestick pattern. If we sit and start searching this only pattern, we will never find. If we are searching this pattern, we will find doji, hammer, hanging man, everything we will find, but we will not find this. So while screening everything, we'll see all the stocks, all the patterns, entry, stop loss. This should be less than 5% or 5%. If it is more than 5%, better ignore the trade. So this is bearish engulfing, just opposite to bullish engulfing, bearish engulfing. So it should be like, there should be a complete rally on the market, 5% upside, minimum 5% upside rally should be there, and first candle should be a uptrend market and second candle should be a downtrend market, and this candle should completely cover the previous candle. Just opposite to bullish engulfing, it's a bearish engulfing. Below this, go for a short and keep stop loss here. Technically we can't keep a stop loss for this much, 3 or 4%. So keep a stop loss, 1.5% keep a stop loss in cash market. And Bharat, you have to check your audio again. Okay, so you have to keep, in case of cash market, you have to keep 1 to 1.5% as a stop loss. Clear? In bullish engulfing, should the red candle have wick? Not required. Bullish engulfing, it's not required. It should have a, it can be anything. It can be like this also, or it can have a small wick upside, small wick downside. Yes, fine. Here it can have a small wick. Yes, we can take this. Clear? So going for a short, you can see like this. See, this is the best example. And we should see a bear. Bear in the sense, we should see a bearish candle. Below this entry, technically this is the stop loss, but still we cannot keep this much as a stop loss. If this is like 3%, avoid the trade, or you can keep stop loss 1 to 1.5%. Clear? So this is bullish engulfing. The very important thing is there should be a rally in the previous side and engulfing should happen. It should have covered the previous candles. Do we see volume candle also? Do we see volume? Yes, we will see volume also. While going for a long, we have to see volume should be in green. While going for a short, volume should be in red. If doji comes on first candle, no, we cannot consider. If doji comes on first candle, it will become a doji, right? Aditya. Okay, what Aditya is asking, if there is a rally like this, and if it is a doji, and will you enter here or here? Technically, think and tell. Will you enter here for a short or will you enter here for a short? After doji itself, we can go for a short, right? Why should we wait this to become a bearish engulfing? Doji low, simply we can go for a short. So this combination does not become a bearish engulfing. Are we right? Same like that. If there is a complete downtrend and if you are seeing a doji, so the next day high itself you will make your entry here. So you don't have to wait this to become a combination. So it's like a small calculations. When this and this comes, this is the pattern. So if the same candle, if it is little bit down, if the engulfing candle, if it is little bit down, it becomes a bullish reversal. Are these sure short signals, or there is a possibility of happening like 50, 50, 60? Okay, Mr. Bajaj, these are all not a sure short signals. These are all the phases, places where we identify market may reverse. Are we clear? These are all we should not consider as a sure short signals. Out of the complete candlestick pattern, somewhere we are getting a place where we can identify, where a semi-automated scanner can pick the stock and give it that this stock is going to something is going to happen in this stock, see tomorrow. So only that much is the semi-automated method. So balance we have to see. We have to see the volume. We have to see the upper breakout or lower breakout. We have to do it manually. If something can pick like this, then why will I work? Why will I sit and train peoples? Why will someone go to work? Simply I'll prepare a bot, execute the trades, everything is done, right? So these are all the place. 50% or 40% manual work can be reduced. So again, it's a bullish reversal. A downtrend should be there. It does not work in a flat market. It does not work in a flat market. There should be a complete 5% minimum downtrend, and the first candle should be red, no doubt. First candle should be red and second candle should be green. So this is called as piercing pattern. Again a two candle reversal pattern. Okay, two candle reversal pattern. First candle has to be red only, it cannot be a green. Second candle has to be green only, it cannot be a red. So to remember this in simply, you can consider this candle like putting an injection in our hand. Putting an injection in our hand. Say like for example, we go for a hospital, they just inject us, only the needle will go inside. The complete the syringe will not go inside our body, right? Only the needle, a part of the needle will go inside our hand. So like that, out of this body, the part of the syringe will go inside and it should be more than 50% of the candle. Say like this closure should be more than 50% of the previous candle. That is the only condition. It's like the green candle is injected in the body. It should be more than 50%. Are we clear? So it cannot be like this. It cannot be like this. So this will not become piercing pattern. Piercing in the sense injecting. So something like going somewhere and it is standing. Not understanding. Okay. Piercing in the sense the first candle, 50% of the candle body including wick. It can be including wick. It can be like this even. Sometimes we can consider like this. Always it will not be like this. There will be a small wick on the top. It should not be like this. First candle is like this. Second candle cannot be like this. This is not accepted. Are we clear? It can be like this. This is accepted. Are we clear, Mohit? Yeah. So after this, the entry will be on the top of the candle. On the top of the candle, you can see here. The entry will be on the top of the candle, and stop loss is again at the bottom of the candle. So again, do you see any disadvantage here? Yes, right? We are seeing a sort of disadvantage because the stop loss is again high. The stop loss is again high. Number one. Number two, in the same range, if you are getting a little bit less stop loss, less than 5%, yes, definitely you can try. Or else, this is the reason we are doing a priority on pin bar candles. It is easy to identify pin bar candle. Why we are giving a more priority to pin bar candle? Because it is easy to identify, stop loss is less, and bounce back ratio is very, very high. So these all candlestick pattern we have to keep as a secondary importance. And next, see here, is the trade triggered here the next day? Again, it's like next day itself. Is the trade triggered here? No. So we don't have an entry here. Here we are not supposed to make our entry. So there is no trade technically in this chart. As per Stock Phoenix, there is no trade technically. We take only the next day entry itself we take. If it is happening on the third day, fourth day, we do not take. So just opposite to that, it is dark cloud cover. Dark cloud. Why it is told as a dark cloud? It is a red. Generally, before this red and green, previously we were using black and white candles. In the previous days, what we were using is, we were using black and white candles. So this candle will be in black, this candle will be in white. So that is how this name came. So this considering as a cloud, and this considering as a this considering as a sky, and this considering as a cloud. So dark cloud cover. So this is how this name came. So on the go, we have changed this red and green just to make ourselves understand very clear that red means falling and green means buying. So actual Japanese candlesticks were into white and black only. So just on the day's modification, it has become red and green. So below this, we can go for a short entry, stop loss. Are we clear? Again, it's a two candle reversal pattern. You can see here. Below this, go for a short, stop loss. Again, there is a disadvantage. Both are with shadow. Yes, we can consider. Always the candle will not be like this. And this is called as Marabuzu candle. If it is green, green Marabuzu. If it is red, red Marabuzu. Marabuzu means there will not be any wick. There will not be any wick. Are we clear? So next, again we will give low priority for this pattern because again there is a risk appetite is there. So this is some kind of name will be a funny name, harami. Name will be a funny name. It is harami, bullish or bearish two candle reversal pattern. You can see here. The first candle for bearish reversal, first candle should be in green. Second candle will be a small candle. It is next to doji. Okay, it will not be like a doji. So just above doji, how it will be? It will be like that. Second candle will be a small body. First candle will be a big real body. Second candle will be a small body. Same like that. Downtrend, uptrend. Above this buy. Keep here as a stop loss. We have to keep here as a stop loss. Don't keep stop loss here. This is the wrong place. Sell here, and you can keep stop loss here. Don't keep here because the cash positions shorting, we cannot take that much stop loss, right? So keep stop loss here, not here. This is the right place to stop loss on a sell, and this is the right place to keep a stop loss on a buy. And same like this, same like this, same like this. Just if you see a doji, it becomes a harami cross. It's very simple. If it is like this, it is a harami. And if it is like this, it's a harami cross. So I'll make still more simplified by seeing this sheet. I'll make you more simplified by taking you one round in this sheet, so that let's not get confused. See what happens. You have to keep this sheet in front of you at least for 2 or 3 months till you get familiar with all these candlestick patterns. So till then, it is very important. Mr. Bath, we are considering direction more than the candlestick self, both engulfing harami taken as a similar trending pattern. Perfect. Don't get confused. Direction is very important. This is for downtrend. This is for uptrend. See, directions, how do we conclude directions? When you see a swing low and when you see a candlestick pattern, will you go on short here? As per the curve theory, will we go on short here? No, right? So it is a direction. Our direction is upside. If next day also, if it is triggering down, we are not in this trade. We will simply ignore this trade. Same like that. If there is a swing up, we are seeing a harami. We are seeing a harami or reversal pattern, some reversal pattern we are seeing. So third day, if it is going like this, we will not trade here because here our direction is only down. We will not go for a long here. Very simple. Identifying direction is very important in the market. If we understood about the directions, it will be like very simple we can trade. So harami along with the candle, we should have a doji like pattern. Yes, correct. So foundation is curve theory. That is perfectly right, sir. If you know, say like for example, if the stock is trading here, then there is no long for us in this area. Here we will go only for shorting. And same like this, in this area we will go only long. We will not go for a short in this area. So foundation is curve theory. If you know curve theory, 90% you can avoid the wrong trades. Please move on to the harami slide. Okay, you can see this harami. It's very simple. If it is a doji, then it is called as a harami cross. The first body should be a green real body uptrend. Second body should be a small body downtrend. Then it's a harami. For buying, first body should be a red real body. Second body should be a green small body. This is harami for long. Entry, stop loss. entry stop loss. Here the small modification is we are keeping the stop loss just above the harami itself. Reason is in a short position we cannot able to carry forward. So that is the reason we are reducing our risk one step lower. So this is very difficult to identify, very rare patterns. This is, if you see, that's good. It's a very rare pattern. Generally nobody screens with this pattern. So next is 3 candle reversal pattern. Again a trade with a little bit headache. Why? Because you can see 3 candle reversal, 1 2 3. After this combination happens only we can identify there is a trade going to happen here. Number 1. Number 2, the biggest disadvantage is, what is it? Stop loss. So the biggest disadvantage is stop loss. So we give very less importance for that. Again, I'll say, like, you might have never seen stock Phoenix students in across all the 17 batches screening for morning star or evening star candlestick patterns. Are we clear? Why? Because we require a trade. If I am ready to take 2 rupees stop loss, I require at least 3 to 5 rupees as a profit. Is that logical? Is that logical? If I am ready to take a stop loss of 2 rupees, at least I need 3 to 5 rupees as a profit. But when you take this trade itself, your stop loss will be ultimately 6 rupees and you will be forced to expect 10 to 15 rupees. So that is the reason we simply skip or we don't scan with this kind of patterns. If you get a good trade, that's fine, but then in that case there should be a very big fall. So generally we don't use this kind of patterns. Okay, morning star and evening star we don't give importance. Say like bullish engulfing, bearish engulfing. Why in setup it was written as downtrend when you are taking about bullish? Downtrend in the sense here, this downtrend should be there. You can see here, there should be a downtrend. It's a downtrend setup, right, Bharat? You understood? If you see evening star, it will be written as uptrend setup. Once the downtrend is over, then only we can look for a reversal. So this is morning star. You can see the setup will be like this. So your entry will happen here, our stop loss will happen here. So too much of space. If you are getting this kind of big movement, then fine. If you are expecting only as per our learnings, our target is only here. Am I right? Yes or no? Maximum here. Our target is, let me draw it again. As per my teaching, our target is only till here. So if you see, your stop loss is 1:1, not even 1:1 we are getting. All right, we are not getting even 1:1 risk reward ratio. So that is the reason we avoid these kind of patterns in the live trade. Same thing, bearish reversal, that is evening star. You can see setup is uptrend. Uptrend in the sense it should have a uptrend from here. It should have given a big rally, and below this entry, and you should keep a stop loss here. Ideally you should keep a stop loss here, but it is very difficult in shorting. Evening star is a risky one. If you can able to hold with a big stop loss, yes, fine, or else it's a risky candlestick pattern considering big stop loss. When you see this kind of setups in a smaller time frame, it will be fine, but smaller time frame, less than daily time frame, candlesticks are not so relevant by pattern. If you are finding doji in 15 minutes, if you find a doji, say for example, I'll give you a small comparison. Doji, okay, doji in daily time frame, it is reliable 60%. Doji in 15 minutes time frame, 15 minutes time frame, reliable 15%. So which is better? In daily time frame, it is in daily time frame itself, it is only 60% reliable. So that means if I take a trade, 60% there is a chance of making profit. But when you take a trade in 15 minutes, there is only 15% of making profit. So why do we want to take the such kind of risk? So candlestick patterns go only by daily chart. If you start trusting daily chart, I'll give you daily charts will give you intraday profits. Are you clear? Will you trust the king or how to say the minister? Minister or what? How do we say that? The next level to him, not queen. Or say like we can tell like, will you trust God or the priest? Who is reliable? I'm not asking who is great. Who is reliable? God. So like that, daily chart is more reliable. It works in option. It works in future. It's like daily chart is like God. If you start trusting, you start trusting. I'm not telling learning. Yes, we are obviously we are learning. Start trusting the daily chart as per the technicals. It will give profits in intraday. You may be surprised like how daily chart will give profits in intraday. A very simple example. Today's trade. As we told, you can see here from 318 to 330. Don't you think 10 points, 3% in a 300 rupees stock, is that sufficient? Number one. Number two, well, and this entry was 80 rupees. 80 rupees, 83, 83.5. 3 rupees in the sense almost, again it's 3%, right? 3 or 4%, almost like 4% intraday itself. Now only the reversal is started. 149, 153. Again, how much? 2% intraday. This went like crazy. It went 130. It went like somewhere else. So if you start trusting the daily chart will not cheat you many times. And the entry should be very clear. We have to do a clever entry. So we have to see the volumes. We should be clever with the stop loss. If your stop loss is more, don't trade that day. So next, tweezer top. So next is a bearish reversal pattern, a very interesting. Why we didn't give Parag milk? Parag milk, it was morning itself. It was given some good profits. It was, so I thought, okay, let's not enter because morning itself almost 10-12 points it has moved. So tweezer top, bearish pattern, identifying the resistance level. That means you can see here, it can be 2 or 3 candles, 2 or more candles with the high point achieving the same level. You can see, I'll come Nanda. That means you can see resistance. There can be one more candle also like this having a resistance. So we can consider this as a candlestick pattern, and below this we can go for a short, or below this we can go for a short. So for this, it's a very interesting candlestick pattern. Many times we can find in Nifty itself. Okay, it's a very interesting pattern. So let me show you some live examples. Many times we can able to see. This is not. Can we consider this as a tweezer top, tweezer bottom? Same like this, just opposite is tweezer bottom. Okay, so good. It's a very good name. Tweezer bottom, bullish reversal and bearish reversal. It depends on the resistance. It's not depends on the resistance level. Somewhere market will go and stuck, and after that it will start reversing. It will go unstuck. After that it will start reversing. We can consider this. You can see here. Can we consider this for a short? Below this, go for a short stop loss. Can you able to see this? There is a mild difference. Can you able to understand this? There is a small difference. There will be small difference. This cannot be considered as a tweezer bottom. No, this is wrong. This can be considered. A small difference will be there. 95%, say like 5-10%, there will be a small difference. And if you take this, we can consider this also. Last class I took this. You can consider this also. You can see here. In the same place, it is taking a support level. So this can be considered as a tweezer bottom. How do you identify support and resistance level in short term and long term? So again, only by daily charts, sir. Nothing called as short term and long term. Depending upon the places we identify. This cannot be considered because there is little bit more gap is there. This can be considered. You can see here. Can we take this? First of all, it's a doji. First of all, it's a doji. So we will not go for tweezer top itself. Tweezer top itself. First of all, it's a doji. Below this itself, it's a short. Am I right? So if you miss this place, if you might have missed this place by taking this 2 candle reversal pattern, you can consider this as a confirmation for short. So you can see after that again there is a clear fall. It will not change on daily basis. See, there is just by screening the charts you can see. We don't have screener for tweezer top. I think you can search with charting. Yes, you can see here. It's a clear bottom. We can take this. We can take this. But here, this when you consider this area, you should have entered in this day market itself. This day market itself, we should have entered. Entering here, it doesn't make any sense because again the stop loss level is big. So this is about tweezer top and tweezer bottom. So that's it about the candlestick patterns. Now we can have small Q&A sessions for 10 minutes. Only related to this subject. Since your charts on daily basis, it was that what about 15 minutes, 13 minutes hourly pattern? That's what I told you first itself. These patterns are not reliable. These patterns are not reliable. Clear? The patterns which is like hourly charts. That is what I gave you a best example. If you go with the daily pattern, you'll be getting only 1 or 2 signals in a week. But if you go with the 15-minute chart, you will be getting 10 signals in a week. So which will you trade? Are you ready to take 10 risk? So not required, right? Which candlestick is more reliable? Pin bar candlestick is more reliable. What is pin bar candlestick? So coming back to the summary. These are the pin bar candlesticks. These are more reliable. You can see here. Let me round it again. You can see here. These called as pin bar candlesticks, and these are more reliable. Easy to identify, stop loss with less stop loss, and you'll be getting a quick trades. Are we clear? Who didn't understand about this pin bar candlestick? Homework I'll explain you, Vinod. Maybe Abhilash will reply today. So today he was into market. Which patterns work best? That's what I'm telling. This pin bar. So we can consider that if we practice doji hammer couple of more later. Yes, Samir, that is right. So if you practice 1 2 3 4 5 6 7. Okay, after this you can also take tweezer top and tweezer bottom. This is more sufficient. Reversal is nothing big: shooting star, hanging man, hammer, inverted hammer, doji. So these all are called as pin bar reversals. And when you identify these kind of pin bar reversals, the entry will be good, the stop loss will be less, and we can get good reversals in a short time. And most of the time chart patterns, when I see intraday, I don't see them I don't see them to be too much in the lead, while daily pattern help us a lot. Yes, that's right, Kiran. Daily pattern gives you good profits, because on a universal basis, traders and big research house look on to daily patterns only. Daily and 4 hours. 4 hours is not popular in India. 4 hours is not popular in India, and 4 hours is popular in currency or forex trading, or other than India, all the broking house or the mutual fund house or the fund managers use 4 hours chart. So if you can able to follow, if you want still quick trade, then daily, then you can follow 4 hours. Less than that, it is 100% not advisable. Are we clear? For a proper delivery trading. So can we get into the next topic? Take this paper, print it, take a physical printout and stick in front of your table, or wherever you are trading. Keep it, or keep in your desktop shortcut. Whenever you are trading, just keep this PDF open. Just this one PDF, this is sufficient. Because initial days it will be little confusion, so we have to get used of this. So don't take uh, uh, big candlestick, all those things and all, not at all required. Let's trade in simple. How to scan such stocks? Nanda, there is trade setup scanners. So once we enter into the trade setup, we'll be learning that. Maybe tomorrow we'll start learning trade setups. So we have a scanners for trade setup. So that will start scaling, filtering all those things. I'll show you. So now we are starting the next topic, RSI, Relativity Strength Index. Okay, so now keep candlesticks aside. Okay, whatever we have learned, that's for good. Keep aside. Now it's like combinations. One more filtration level. One more filtration level. For example, on a crashing market, and after that, one day market is reversing. What happens? You will get 50 stocks for buying. How can we watch all 50 stocks, or how can we invest? So additional filters. So these RSI MACD are additional filters to make sure that we eliminate the stock which is completely dead. Are we clear? We will eliminate the stock which is completely dead. 5% is also crash and 25% is also crash. Am I right or not? Crash 5%, 25%. So will this both come into the category? You see a doji here, you see a doji here. Say like we will take 7%. So which stock you will take? Which stock you will try to prefer? In 15 days, for example, 15 days, same 15 days, this stock is crashed by 25%, another stock is crashed by 7%, and you are seeing a doji in both the places today's evening. Okay, so everyone may think that we have to pick the 25% stock. No, that is wrong. We have to pick the 7% stock, because this is completely dead. That means, see, up to 5%, 10%, there is a control on the buyers and sellers. If there is a crash on 25%, that means buyers control is completely out. And RSI, so the other scaling parameters will show you that stock is dead. So dead stock, it has to be dead stock in the sense it will be in a coma stage. Okay, dead stock in the sense it will be in a coma stage. What is coma stage? It will be keep on sleeping for long days. After that, after enough sufficient treatment, will slowly reverse, again it will go down, again it will slowly reverse. It will take sufficient time, and after that only it will start reversing. So this stock whichever is fallen recently, it will immediately bounce because there is no fundamental issues. So that is what we are trying to do. We are trying to put some more filters. Okay. So initially maybe now learning stages, when you see the screen, you will feel this like a mess. You will feel this like a mess. But now I cannot able to evaluate a stock without these lines. When you see these lines, you'll initial stages, you'll feel like a mess. What red, green, every line is going, how to identify the entry in the stock, we'll feel like that. But on when days goes on, when you are used with this lines, if you understood what is the purpose of each and every line, then without this line you cannot able to evaluate at all. So that is the inference which is going to happen after this 21 days. I am not telling about 3 months, 6 months, just after 21 days. So now let's learn about RSI. I have a small PPT, not big theories and all. Let's understand what is RSI in short, and after that we will enter into the subject. So I don't want to tell stories and all. Straight away RSI. RSI, Relativity Strength Index, is a popular leading indicator which is widely called as RSI. It is developed by Wallace Wilder. RSI is a leading momentum indicator. So this is a important line. What is leading momentum indicator? That means assume that a stock is, okay, let me change the pen color. Assume the stock is completely crashing. Okay, crashing in the sense up to 7%. Once the stock starts reversing itself, it will give a signal. It will give an alert, and we have a scanner for this. That is the best part. It will give an alert that this stock is going to crash, sorry, this stock is going to reverse from the bottom. Good thing, right? It's a leading indicator. So do you think, assume that, say like one indicator is giving an alert here, other indicators giving an alert here, which is better? First or second? First, always first is better, because if I make an entry here, this is my stop loss. I'll close my trade here itself. When I make my entry here, where will I keep stop loss? Obviously, I have to keep the stop loss on the low itself. And I don't know how long the stock will reverse. So this indicators lies under the first category. That is very important thing. It's a leading momentum indicator where it may also give a false signal. That is the reason we are combining this with candlestick. That is the reason we are combining this with candlestick. So which helps in identifying the trend reversal. RSI is RSI oscillates between 0 and 100. So now let's first add RSI. So let's see first RSI. What is RSI? So now by default this is the RSI. I will just expand to explain. So this line is the RSI, okay, and you can see the scaling is, this is called as 100, this is 0, this level is 0. So this RSI will be rotating in between like this. It will go like this. It cannot go above 100, it cannot go below 0. So that is the maximum and minimum scaling. Okay, so this line is RSI. Next, traditionally RSI is considered 70, and 70 is overbought and 30 is oversold. So what everyone is telling is, if this line is going above 70, then they are considering it is overbought, and we are expecting it to come down, stock to come down. And if it is going below 30, then we are considering it's a oversold. That means stock is undervalued and we are expecting to reverse. So that is traditionally. We have little bit change. So RSI can be used to identify general trend. General trend we will identify. So what else? So balance and all, it's a stories. Okay. So now let's get into stock Phoenix mode. So now adding RSI. I am closing this. Watch carefully. RSI, this scaling from now onwards, scaling is very important. Instead of 14, if you put 10, the formula will be wrong. The signal will be wrong. Instead of 14, if you put 41, again the signal will be wrong. So signal is very important. Okay. Change here 60, change here 40. Everything is there in the Excel itself. Change here 60, change here 40, and change the color here to red, change the color here to green. Any doubt? 14 as it is, overbought 60, oversold 40. So we will not consider this as a overbought and oversold. We will use this for a different level, different purpose. As of now, it is clear. Why is the period should be 14? Yes, 14 days value. The period 14 in the sense 14 days value. Clear? So next apply. So we have applied. So now let's understand RSI. How to use this? Does it consider 14-day volume? No, sir. It's considering only 14-day value. No link between RSI and volume. Okay. RSI and volume, there is no connectivity, only value. Let me take Reliance. Let's not take Nifty. Let's take some stock. So now, how to use RSI? So now we will be learning one by one. We'll be learning one by one. So listen little carefully. RSI scaling should be 60 and 40 only. RSI period is 14. RSI scaling is 60 and 40. That is above it is 60 and below it is 40, and RSI period is 14. Okay, number one done. Next, we should know for intraday, for delivery, what else, for Nifty chart, Bank Nifty chart, everything it will be same. Other than HAC strategy, RSI will be same for all the trading patterns. No change in this. Above it will be a red color, below it will be a green color, and 60 and 40. Clear? So no entry in the stock or index if the RSI is between 40 and 60. So where to see RSI? Don't see RSI here. Don't see RSI here. Don't see RSI here. We have to see the RSI at the end. Current day, what is the RSI? This is the place you are supposed to see the RSI. And current day value, it will show here. Aditya, that we will see at the HAC strategy, not now. Okay. So current day value will be shown here. So keep on RSI, it is almost 60, right? It is 60. So RS, no entry in the stock or index if the RSI is in between 40 and 60. It's a no trading zone. That means you can see here RSI line 60 is here, RSI line 40 is here. Now is this in between RSI 40 and 60? Is that right? So we will not make an entry in the stock if the RSI is in between 40 and 60. This is called as no trading zone. This is called as no trading zone. See here, it's a doji. It's a doji. There is also a 5% fall. Entry is triggered, but it has failed. It has not given big profit. It has failed because RSI is not supporting. Did we understood the second point? If the RSI is in between 40 and 60, it's a no trading zone. So now, what is the RSI? It's above 60. It's above 60. So for that, we will see what is that. Let me show you some stock which is in between. So now, Can I able to see the RSI? What is the RSI scaling now? Can someone tell me what is the current date RSI scaling? Perfect. RSI is in between 45, sorry, 40 and 60. So there is no trading zone. There is no trade for this particular stock. So you can see here it's like a doji format. Still we can consider this as a doji. Okay. Still we can consider this as a doji. Let's see, is there a 5%, 326, 365? Yes, there is a 5% fall, but we will not take this stock because RSI is not supporting. Okay, RSI is not supporting. For example, out of the box, I'll tell you one example. Assume that this is the ground and this is the first floor. You are putting one ball here. You are putting, just not throwing a ball. You are just putting a ball from here, first floor to the ground. You are putting. Will it bounce here itself, or will it come and touch the ground and then only it will bounce? First or second? This is the ground. You are standing in the first floor and you are putting a children's play ball. Children's play ball, right? Not a cricketer ball, a children's tennis ball. For example, rubber ball we used to play in the school days, right? So that when we put that, will it bounce from here itself or here itself? So this is realistic. That means still the stock will further come down. After that only it will reverse, because most of the time this line has the power to attract this line in the sense, this 40 line has the power to attract this line till here. After that only it may reverse, or it has the power to attract and it will still pull down. After that it will reverse. How do we decide whether we have achieved a second level? When it reverse only we will know. So that I'll explain you, sir. I'll explain you. Okay, let's go in order, point by point we will see. So now we have seen there is still a doji pattern. Number one, still we can consider as a doji pattern, but still it is not a perfect doji. Am I right? Is this a perfect doji? If it is like this, we may consider. Small difference we may consider, but still here we can able to see a body, and you can see here it is a prop. It's like a hammer, but again it has failed. Why? Because RSI is not supporting. Okay, so next, so RSI 40 and 60 will be a no trading zone. Number one. Number two. Number three, RSI 40 will act as a support and RSI 40 will act as a resistance. Now learning support and resistance. So out of RSI, now this line. So learning general support and resistance. That means it's not only for RSI, it's also for moving averages, other things. Let's see that later. This 40 line will act as a support and this 40 line also will act as a resistance. You can see here, after crossing this 40 line, it is acting as a support. Again, you can see here, it is again acting as a support, bounce back. You can see here, right? So this line, this 40 line will act as a support, and this line, the same line will act as a resistance. You can see here, support, support. Next you can see here resistance, and when we go pre-early we can see resistance. Just a minute, let us see. See here, this 40 line is acting as a resistance, the same 40 line is acting as a support. That means, to be in a clear example, say like, assume that this is the 40 line. Till the RSI is above the 40 line, and when it comes back, it will give a support. Again, when it comes back, it will give us support. When it comes back, it will give us support. After that, a breach. After that, the same line will act as a resistance. How do we find price of the stock on 40 line? So very simple, sir. You can see here, right? You can see price of the stock on 40 line. How much is here? 397. Is that right? Again, price of the stock on 40 line. You can see here 380. Okay. So now, are we clear about this fourth point or fourth point? Third point. RSI 40 will act as a support. RSI 40 will act as a resistance. That means when the RSI line come towards the 40 line, from here we can expect a reversal. Again, when the RSI line comes to a 40 line, and from here we can expect a reversal. And when it goes below the 40 line, the same RSI line will act as a resistance and it will not allow the stock to go above. So these are the technical indicators which is controlling the stocks. Yes, correct, Samir. Okay, next. You can see here multiple resistors. 1, 2, 3. After that, it's a break even. It's broken, and again it's going up. Next, RSI 60 will act as a support. RSI 60 also will act as a resistance. Same like 40 line. Same like 40 line. This RSI 60 line will act as a resistance. You can see here 1, 2, 3. After that, it's a breakout. It went above. Now see here, it's acting as a support. Again breakdown. You can see here. This place you can see here. Resistance, that is breakout, support. Here it tried to give a support. After that, it's a breakdown. So our entries will happen on 40 line and 60 line. So now I believe everyone is clear about RSI acting support and resistance in 40 line, and RSI is acting as a support and resistance in 60 line. So in between RSI 40 and 60 there is no entry. Okay. So next, entry will be done only when the RSI crossing 60 from the below from a sideways market. That means we will make our entry when RSI is crossing 60. Our entry will happen here only. From sideways market, when the RSI crosses 60, we will make our entry. See here, cash market. All the technical studies are for cash market, and it is not for a future or option. Technical chart should be done only in cash market. It's not for future or option. Clear? So next is, let's see multiple examples. Let's see some other stocks. That is out of the box. That was a big boom. You can see here. This is the place which is giving a breakout. So this is the place we will make an entry from a sideways market. UPL. Let's see UPL. This is the entry from bottom. Okay, so we have seen the entry from 60 on sideways market. Okay, let's complete this. Be on the position until the RSI is above 60 levels. Let's take be on the position until when the RSI is above 60 levels. For example, if you might have made your entry at this place, forget about candlestick pattern. Now learn only with RSI. Okay, we will combine. So as per RSI, your entry happens here only. Okay, so when you make your entry here, you can hold the position till it breaks this level. See, it is not broken. Your entry is here and the level is getting broken at this place. Is this a profitable trade? Entry is happening here, exit is happening here. Is this a profitable trade? Just forget about candlesticks. We are learning part by part. We are learning how to say system by system. We are learning. Then we will combine. Okay. So you can see here. Next, again we will see one more example. So how to decide the exit when it gives a sharp bend? So entry will be done only the RSI crossing from 60 from the sideways market. Be on the position until the RSI is above 60 levels. Exit the position when the RSI is falling below the 60 level from the top, or RSI turning towards downside from top. See here, one more example. Our entry is happening here. Maybe you take like this as an entry. Okay. So where is the exit? Entry, entry, exit. Still it is profitable, but it has not came down. Maybe if you exit here at this level, see, still it's a profitable trade. So trading only with RSI, still it's a profitable trade. So when to consider RSI as a given, RSI turns downtrend in the sense, when the RSI goes completely on the stock market, after that what happens, it will give a sharp bend like this. It will give a sharp bend like this. If it is turning like this place is absolutely fine. It is slowly turning bearish. Sometimes what happens, when the market goes like this, RSI also will go like this, and after that it will start giving a small hook like structure. Small hook like structure it will show. At that time we should understand that there is a reversal is going to happening. So we can exit from, you can see here. Is it matching the criteria whatever I told? So when is your entry happened in this trade? You can take the complete benefit of uptrend. Entry, your exit. Maybe here. Very rarely we get this kind of rally, but if you observe carefully, we can take the complete benefit of delivery trades. Are we clear? Any doubt in trading with RSI? Entry with 60 and exit on the sharp bend. And if you are not exiting here, 100% you have to exit here. 100% you have to exit here when the RSI is leaving 60 levels. Is it profitable still? Bharat, hourly chart not possible, Bharat. It's not in our curriculum at all. How it works for intraday? It will not work for intraday. I am teaching about delivery trade. Why you are comparing with intraday? Intraday, another 10 days is left. See, that's what I am telling. If you learn properly about delivery, intraday you can do like nothing, sir. Why we are not doing entry at 40? I'll explain you, sir. With 40 also we are having an entry. Sharp turn could be a false also. Yes, sharp turn could be a false also. For that, say like for example, when you make your entry here and the stock moves here, what you are supposed to do? Again, going back to the basics. We made an entry here. Perfect. Trailing stop loss. See, it's a false entry or not. What we are supposed to do? We have to trail our stop loss, right? Perfect. So when the stock moves here, when you make your entry here, stock goes here, trail your stop loss. 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 Let it hit. When we go higher the targets, take your stop loss near to the current market price. So even I was seeing someone in the channel today trailing the stop loss in Reliance. Am I right? 1,000 rupees profit and exit was around now 950 rupees. Who was that? That's a perfect system. When nearing the target, we have to take our trailing stop loss near to the profit price, so that you take the complete benefit of the market move. So this is how we can take the benefit. So Deepak, I'll come. Deepak, shorting and all, I'll come. Let's learn in order. Okay. So now when the RS, so now we have learned what is entry, exit, buying. Okay. When the stock is on downtrend, RSI 40 will be the below zone. When the stock is on downtrend, RSI 40 will be the below zone. And when the stock is on downtrend, entry will be done with RSI crossing 40 levels. How we are entering at 60 levels? Same like that. When the stock is completely crashed, when the stock is completely crashed, okay, the stock is completely crashed. Okay, let's not take this. This is some news. We should not learn with the wrong examples. So that is the first parameter of proper learning. You can see here, stock is completely crashed. Stock is completely crashed, and you can see RSI. Okay, let me enlarge this picture. Yes, bank. It should not be a right example, Nanda, because that is something driven completely out of news, right? So let's not take that as an example. You can see here, when the stock is completely crashed from 60 level, it is completely crashed below 40 levels, and you can see here our entry will happen at this place. Our entry will happen when RSI leaves the green zone. Ideally, when you see a green zone, you will try to buy here. No, that's wrong. When it comes out from the green zone, our entry will happen here, somewhere this place. Okay, and when you make your entry here, your target will be here, touching the 60 line. Is it profitable? Is it profitable? When the stock crosses RSI 40, make your entry and exit. Sorry, your target will be reaching to 60. Reaching to 60. So when it reaches 60, either you trail your stop loss, or again when it comes below this level, 100% you have to exit. Sometimes what will happen, it will go above like this. Take the complete benefit. I'll try to show you some place like that. See this place. Entry. So entry is here at 125. So ideally our target is at this place. 125 and 140. See, this itself is a good profit, right? And making an entry in the stock at 125 and 160, sorry, 140 is a good profit. So entry, exit. So if the RSI is still completely going up, you can exit here. So is it matching the first criteria? A small bend like structure. Is it matching the small criteria? So what you can do is you can make your exit here, or 100% you have to exit here. 100% we have to exit here. So let's see how much. Still it is more profitable only. Entry is happening here. No, sorry. Entry is happening here. I am taking a good slippage and I am giving an example. I am not taking neck to neck. I am taking an entry with good slippages. You can see 128 and exit at 145, 128, 145, almost again 15 points in IRB is a good profit. So previously you told 40 and 60 is a not trading zone. I am telling now also I am telling, while crossing the 40 we are making an entry. We should not make our entry at this place. Either we should make our entry at this place or we should make our entry at this place. So now assume that you didn't see this place. Everyone, assume that you didn't make your entry at this place. You didn't make your entry at this place. You are seeing this. Will you make your entry? Yes or no? No, we should not make. We should not make. Why? Because it was a proper entry. It was a proper entry. Read the second point carefully. I'll explain you again. Going back there, I'll explain you. It was a proper entry and it has given the clear profits. It has given the clear profits. What was the entry from 60 was? Entry will be done only at the RSI crossing 60 from the below on sideways market. Did you see any sideways market here? Is this a trending market or you will tell this as a sideways market? Answers. Sideways market means trading like this. This is called a sideways market. We know this is a trending market, we know. It is not a sideways market. It's a trending market. From 1 to 125 it has entered 140. That means it's a trending market, that too in 5 to 6 days. Okay. So this kind of places we should not enter in RSI. See here. See here. This is a sideways market or trending market? Sideways. So can we make our entry here? Can we make our exit here? Small profits, but still we are getting a good profit. Small, but still we get a chance to 154, 169. Sir, big profit, sir. If you might have entered here, 15 points again in IRB is a big profit. It's almost like 6-7 points, 6-7%. Now did we identified where all we are getting an opportunity? Simple graph, the same graph you was using for years together, but now our views are completely different. Am I right? It's not only this, you take any XYZ stock and check, it will happen. And same like that, you go to 15-minute chart, it will not work. You take 15-minute chart and compare the RSI, it will not work. Many errors will be there, many stop loss will be there. Here also stop loss will happen, but very rare case stop losses will be there. See here, RSI is crossing 40 levels at this place, right? So do we have an entry here? Do we have an entry at this place? Answers. Almost we are going to complete RSI. Almost we are done. No short. No short, because when RSI reaches below 40 level, that means that is equal to bottom of the curve. Are we clear? When RSI crosses from 40 below, it is like almost like equal to reaching bottom of the curve. You take this as a curve. You take this RSI as a curve. It's like a life cycle, sir. Very simple. So will you go on short at this place? That's the reason I am giving you green color. Don't short here. This is the area for buying. See here, almost many days RSI was in bottom. Stock didn't move at all. Stock didn't move at all. The moment RSI started moving upside, you can see here, the moment RSI started moving upside, assume that you might have made your entry here, even here. Okay, you can see stock traveled a good amount of reasonable profit. I think it took time, but it has given a good profit. 158 to 167, 10 points. 14th September fake signal. Let me see. 14th September. It was a fake signal. Maybe we can consider as just a minute. 14th September. Yes, it was a flop show. So our stop loss hit. You are making your entry here. You are making your entry here. So now you can start combining. You can start combining. So now this is the entry. Where do you keep your stop loss, sir? See the environment. Environment in the sense reading the complete chart is called as the environment. So now where will you keep your entry? This is the entry. Okay, where will you keep your stop loss? Can someone tell? Just see the previous candle. What is that? Doji. Perfect. Keep here as a stop loss. Do you think this is going to change? This is going to affect your life very badly? 175, 167, 6 points. Again, 4-5%. Yes, it's a good amount of stop loss. 5%, but still it's manageable only. Okay. So don't start climbing from the hill, from the middle. Yes, that's correct. Now next. So beyond this we have seen what when the stock is on downtrend, RSI crossing 40 zone. Okay. So now these are the things we have learned. When the stock is in downtrend, RSI crossing 40 zone, then the RSI 40 will be support and RSI will travel towards 60. So that is what we have learned now. You can read this. Now going short. Now going short. You can short. Trading a short positions in RSI. Okay. You can go short when the RSI takes a sharp curve like this. When the RSI gives a sharp curve like this, you can go for a short at this place. For example, this is the place you will be going for a short. And when you go short here, you have to put your stop loss at the previous candle high. Or we can see some other places where we can see here. You can go for a short here itself, or you can go for a short here also. Both is fine. If you go for a short here, you should keep this as a stop loss. You can see again 152, 140, 10 points. Again, it has given an opportunity here. Your entry can be almost more or less, it's around 150 levels. And you might have closed your positions at this place. No, it has came till here, 40, 140. Again, in the reversal, you might have exit. Yeah, you can see that's what. Now we are learning only just by RSI. After that, we will start combining RSI and candles. Both we will start doing. See now exclusions. Exclusions in the sense you can see here. What is this? Can we consider this as a doji? More or less like a doji. And again you can see here RSI is taking a resistance and again turning. You can take a chance of shorting here. You can take this as an additional confirmation. So RSI is giving you one more strength that this stock is going to downtrend. So it's when you start looking the charts will start telling you what is the trend. That is very, very important. And when days goes on, just by screening the chart, just by seeing one site on the chart itself, you can tell do we have an entry or not. So when the RSI is in uptrend, RSI will be above 60 zone. You can take a short positions. When the RSI is crossing 60 from above, you can trade in intraday cash future option. Same like that, when it is crossing from below, you can buy intraday cash future and option. After crossing from 60 from above, RSI will travel towards 40 zone and it will take a support. It's like a cycle, sir. It's like a cycle. For example, RSI 40, 60. Okay, RSI 40, 60. So it will take a resistance, it will give a breakout. So our entry happens here, and straight away this is our target. So you can easily book your profits here, or else if you feel that still stock is bullish, then when RSI gives a turn like this, exit. And if not, here 100% you are supposed to exit. After that you can go for a short here, and this becomes your target. And when it comes here, again it will take a support, it will reverse. We are not having an entry here since it is coming down and reversing. We are not having an entry. After that, market goes sideways. After that, it will go break even of 60. We are having an entry for long. And again, when it gives a sharp bend, exit. It's like a small cycle, like a small butterfly cycle. So you can trade in the same stock throughout the year. Are we clear? If you have 10, if you have say like you want to trade only in 10 stock, yes, you can still trade, but you have to follow the cycle. Since I want to trade in ITC, don't trade in ITC every day. Yes, you can trade in ITC. Yearly you will get 5 entries, that's all. Is it good? Same like that, you follow 10 stocks, you will get 50 entries. This is far sufficient. What will happen if we change the limits from 40 to 30 and 60 to 50? You will start getting many signals. You go and check anywhere, nobody is following this 40 and 60 as a indicator for RSI. Can we take a intraday for short? No, we cannot able to take intraday for short. Now we are learning positional trades, right? So this 40-60 is unique method what we are following, and how to say, it's like a basket. It is very much back tested, no doubt in that. It's very much back tested, and we have seen enough good profits in this methods. You have seen the trades of stock Phoenix positional trades, like, right? So how do you feel? Do you feel that is worth enough? Our stock Phoenix public channel positional trades. How many stocks are hitting stop loss? Very rarely when market crashes, it'll hit the stop loss, or else it is perfectly, it's fine. So we will stop with RSI today, and we will continue tomorrow. Any questions you can ask? So you read these points again. How do you suggest we practice this? Okay, one more thing. We have a scanner for RSI. Okay, we have a scanner for RSI. RSI is suitable only for daily charts. As of now, daily charts. See, again and again, everyone is trying to do is, you are trying to minimize the time frame and trying to take the trades in intraday. Am I right? Tell me honestly. Am I right or not? What I am teaching in daily, what everyone is trying to do is, you are trying to convert that into 15 minutes or 30 minutes time frame, and you are trying to take the trades in intraday. But what I am telling is, if you take in intraday, out of 5 trades, only 1 or 2 will be profitable, and again 3 or 4 will be error. 4 will give you loss. Do you think that is a good option? So it is not going to work. So please follow daily charts itself. Daily chart will give profit in intraday. That is my guarantee. Clear? So let me read the question one by one. Today no homework. You can just go through this RSI. RSI is suitable only for daily charts. I have answered. Can I explain 15th point? 15th point, you can take short positions. See, short positions in the sense, when it crosses from above to below, you can make your entry short here. Is it crossing from above to below? It has went above to below, it is crossing. You can make your short positions here. It has taken 4 days time, but again there is a fall, you can see. Same like that, you can see after crossing from above to below, you can make your short position here. See, 88 rupees, 60 rupees. It is a clear short. Yes, Mohit. What is the maximum profit where we can hold buy position if not bent? Maximum profit, there is no limit. Like Reliance, it will give big profit also. At one point, market you mentioned sideways trade. However, RSI was in between 40 and 60. Candlestick was showing an upward trend. We will not make our entry. If market, if RSI is not giving an entry, we will not make an entry even if there is a candlestick. Even I was checking positional call on HSE pattern. Okay, positional call on HSE pattern. No, sir, that's wrong. See, that is meant, HSE is meant for intraday. Why do you do positional trade there? In 10 stock, 8 may hit stop loss. Yes, if you trade in lower time frame, the stop loss will be high. Candlestick or RSI, which is more trustable? Anand Sundaram, candlesticks and RSI. We will be combining both. It's not like father or mother. We will combine the whole family. So that is what is we are going to do. See, basically what we are trying to do is we are learning, bifurcating and learning. After that we will combine. If you see this sheet itself, say like you can see here, analyze the candlestick pattern only on daily time frame, trade using candlestick pattern, trade using RSI and candlestick, trade using RSI candlestick MACD, trade using candlestick RSI MACD pivot moving average. We'll club everything. After that, when you get a trade, it will be a gunshot. And above that also we get error, but we should hold with the stop loss. Okay. So as of now, that's it. So tomorrow we'll combine, we'll complete the balance curriculum. So it will be very interesting. So start practicing next day, that is tomorrow. Practice about what we learned today. So that is very, very important. Okay. Thank you.